Stock futures continue to trend lower after the latest jobs data showed stronger than expected hiring momentum and wage momentum. Unemployment held steady at 3.7%. Wage growth picked up to 5.1% on a year-over-year basis. Joining us now for more on the market action is Gargi Chaudhuri, who is BlackRock Americas iShares investment strategy head. Gargi, as always, it's good to get some time with you. I know you just came out with your 2023 investor guide. Given the jobs numbers that we just got this morning, how does that feed into your economic projections and what investors really need to be zeroed in on going into next year?
Sure thing. Good morning, Julie. It's great to be here. So obviously we got a interesting, jobs number, and I don't think that changes how we're thinking about how investors should be positioned for the next 3 to 6 months at all. You know, what we lay out in our investor survey is that there is a huge amount of opportunity in the fixed income markets, one that we haven't seen in about a decade and a half, and investors should be gravitating towards the income produced in the higher quality sections of the fixed income market. And honestly, a day like today with yields backing up, getting back to levels that we had seen prior to Chair Powell's speech at the Brookings, I think provides a better opportunity to enter some of those trades. So while the data today was certainly stronger than many had expected, I don't think that changes the dynamics, especially going into the December Fed meeting.
Gargi, you also discussed value-style equities within some of those 2023 investor guide ideas. And so break that down for us and where potentially for people positioning their portfolios, even going into 2023, where they can still maximize returns, but also be in a defensive environment as realistic as necessary.
Absolutely. So as you'll remember from the last few times I've been on your show, we've had a very cautious approach to equities. We've been talking about owning healthcare providers. We've been talking about minimum volatility strategies. And there's still more downside to be seen in the equity markets, to be honest. I mean, we are probably going into January earnings season. It's going to get some revisions lower to earnings forecasts. But having said all that, I think we need to readjust what we think we should invest in when the market rebounds. So when you buy the dip, which everyone wants to do, what should you be buying in a higher rate environment? Now, remember, the last 10 years or so, we got used to a negative real rate environment. And now we know that we're going to stay in a regime of higher for longer, not lower for longer. And that actually bodes very well for allocations to the value style factor, to things like IWD, which is an iShares ticker that we are recommending to our investors, or an IVE, or even a VLUE, which are great ways to get access to that value component. So again, thinking back to what interest rates should do for the next 3 to 6 months, we think they're going to stay high like they are today. And again, that means value should outperform much like it has done this year.
And now, given all of that, Gargi, and given that you and many are forecasting a recession, given that a lot of strategists are not looking for many gains in the overall stock market next year, should people be thinking about 2023 through a capital preservation lens or through a wealth building lens or some other lens?
Yeah, I think that as we think about 2023, I do think it's going to be a year of two halves, or at least based on what we've seen from the Fed and seen in the data so far. I think there's going to be the first couple of quarters that you're probably supposed to, again, allocate to fixed income, allocate to value parts of the equity market, which will fare better. And then as we get to the recession, look, it's not going to come upon us immediately. We do think it'll arrive at some point in 2023. And as we realize we're falling into a recession, the Fed most likely will change their language. Again, not pivot, but they'll certainly make sure that we understand that they're not over tightening policy. And I think they told us that earlier this week at the Brookings as well. And I think at that point, you're supposed to allocate to, more riskier parts of the market because the Fed is giving you that green light. However, for the first quarter, at least, looking from here to March, bonds should play a very big role in your portfolio. And especially on days like today, when yields back up a little bit, I'm actually very excited about that because it gives investors an opportunity to re-enter sectors of the market, such as front-end credit, such as mortgages, such as TIPS, and even front-end treasuries.
We were discussing earlier here in the show that we may not get, just a straight up type of rally, basically, or just some strong rally, but there could be some good days and there could be some volatile bad days. What would you say to anybody that is just saying, you know what, I just want to sit on the sidelines for a little bit right now?
I would say that it's all about how much time you spend in the markets. We've done so much work around, looking at previous cycles, where if you've just missed 5 or the 10 top performing days in the market versus being invested for the entire period of time, your returns over the next 5 or 10 years have been significantly more superior. So if you're staying in the sidelines, look, I get why you're doing that. The 2022 has been a really difficult year for investors. I get it. But I would say play the long game here. I think, over the next 12, 24 months, are we going to look back at these levels in especially the bond markets, especially in some pockets of value equities, even perhaps at some point, if we're looking out for 5 years, are we going to look at sectors like semiconductors and stocks and wish that we had bought them? Sure. So play the long game. I know that it's hard with years like this, but I think it starts building up really good opportunities in the market and, make the long-term investing your North Star.
It's an even harder year, Gargi, when your hometown Phillies lose the World Series. Gargi Chaudhuri, BlackRock Americas iShares investment strategy head. Thanks so much for joining us and giving some of the key themes to watch for and perhaps put into motion in 2023. Appreciate it.